Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. Bullish engulfing pattern and bullish white Mariposa yesterday. It's not such a surprising pattern to see after all. The previous session was an indecisive doji cross. The market was once again supported by the gently rising short-medium moving average, currently at 70.05. Interestingly, the overhead old broken upper rising wedge trend line, currently at 70.28, once again did not provide resistance, unlike earlier this week. Then it had capped the market. Now we still have a changeover gap overhead all the way up to 71.14, plus some recently acquired congestion in the 70.80 area, which I previously mentioned. So far today, higher open and an attempt up at that previously mentioned recently acquired congestion in the 70.80 area, and an immediate rejection back down to yesterday's close, though not much further. It still gives us what looks like right now like an indecisive spinning top. A really interesting move yesterday, highlights a few things. A counter to the counter bullish harami yesterday. This is the latest in this week's ongoing intraday indecision, as the market finds itself pushed up by the gently rising short-medium moving average, currently 15.414, as it was yesterday, but then capped by the 50% projected Fibonacci line overhead at 15.629 and the flatlining short-moving average, currently 15.634, as it was also yesterday. Beyond the nearby overhead resistances, we have the recent broken lower bull channel line, now moving away from the others. That's actually currently at 15.677. Meanwhile, further below, we have the newly reassigned October 2020 today uptrend, currently at 15.345. Take what value from that you will. Like I've said all this week, it's all getting a bit precious now. Now, so far today, a higher open and a move up to test the 50% projected Fibonacci line, but stalling before properly testing it and moving back down just under yesterday's close. This one has become very, very interesting. The shooting star pattern we saw 2 days ago, you remember, the one I called quite small, and I could not tell if it was a type 1 bearish or type 2 bullish. Well, it turned out to be a type 2 bullish one, as yesterday we had a bullish white Mariposa with the second highest high ever and the actual highest close ever. The market pushed up over the gently rising short moving average, currently at 42.41, and the May high at 42.38, stopping short of testing the all-time high from last week at 42.67. Remember that number. Okay, it's about time I repeated myself once again. I mused 2 days ago on a possibility in another broadcast, that the way this market had, this week had reacted to last week's weekly key reversal down, which was then at the top of the market, may see prices here rise and breach the high of last week in compensation, and then if this happens and prices close today, this is Friday, over 42.46, then would have a strong immediate countering weekly key reversal up. Remember, we can't go, it doesn't matter where it closes at 42.46 now, it needs to close, it needs to move higher above that 42.67 level and then come and close over 42.46. Then we'd have a strong immediate countering weekly key reversal up, something worth considering. To put it bluntly, the time has come to put up or shut up. Watch today's high and then tonight's close carefully. So far today, a higher open, the highest open ever, and a move up towards that all-time high. But the market has hesitated before it. Expect a little more of this before the market decides what it wishes to do, but a decision tonight is what we will have. French CAC 40 futures. A reactionary bullish opening white Mariposa yesterday, countering the previous 2 sessions of bearish black crows, especially the prior looking bearish black Mariposa. This time the market closed back up over the lower time, currently at 66.28. The recent late February to late March broken bullish shift pitchfork, but only by a little. This time the market utilised the rising short moving average below, currently at 65.79 as support. Overhead we now have the 100% projected Fibonacci line at 66.80 and the recent high from last week at 66.87. Now so far today, a higher open, then a dip back below the broken lower time and around about yesterday's close, just below yesterday's close, but not as far as the short moving average. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.